Hello, welcome to Precious Metal Support Episode 1. We'll be answering some questions that our community has to ask us about precious metals. So let's go ahead and answer some. The first question we have from just_here92 is asking, is now a good time to buy gold or silver? And to be honest, we get a lot of these questions on the sales floor. I think personally, it's less about timing the market and more about essentially why you're buying.
Yeah, you have to understand, you have to ask yourself what's your time horizon. Understand that if you're investing, you should look at 5 to 10 years minimum. If not, all these are short-term trades.
Correct.
And it wouldn't make sense to invest into precious metals.
Yeah, and sometimes we also encourage clients to probably do more of cost averaging, whereby you start small, but you kind of like buy consistently moving forwards as well.
Basically, dollar cost averaging.
Yes, correct.
So the second question, Daniel Tan03 asks, who actually sets the gold and silver price?
Oh, okay. That is an interesting question. Well, you see, the prices, they are normally found on global exchanges like COMEX and LBMA, and the market is actually the one that is actually setting the prices.
Right, it's a market, demand and supply.
Correct.
Right.
It's mostly a paper market, and not truly a physical metal trading hands, I would say.
Right, so that's the spot price, and then the physical trading price is different. So there's like premiums on top of physical metals.
Okay, let's move on to question number 3. At curious_1 asking, what's the difference between allocated and unallocated metal?
So allocated metals essentially are bars that under your name. For example, we also do allocated metals. The banks do allocated metals as well. These are metals directly under your name, not in our balance sheet or the bank's balance sheet. So we cannot use it for other purposes. While unallocated metals are metals like with a paper claim. So the banks essentially put it on their balance sheet and they can leverage it out by selling it to other people, so on and so forth. If the company goes under, you are a creditor. So it's not yours. So you kind of need to line up in the bankruptcy filing of the company to hopefully get back a portion of your funds. And normally you wouldn't get the metal itself. They will settle by cash or whatever that's remaining. So that's the downside. So we always try to advocate clients to buy allocated metals. That's why physical metals, bring it home or store it somewhere. If it's not physical, it's actually not yours.
That's a very good answer, Ricky.
Okay, the next question, Jiawei_L asks, how does pricing works and what are premium and spreads?
That is a very common question that we get here on the showroom floor as well. Basically, premium is the fabrication of the goods before they're being made. So that fabrication price, the logistical cost for it to be transported to us as well, the dealer margins as well. All those prices on top of one another, that becomes the premium. It's like buying anything out there. You buy a certain product, it could be the same, but different brands will carry different prices. Same for us as well. When we purchase something from the refineries, it could be different brands, different refineries, and they'll charge us differently for different premiums. So hence why when you purchase, you see how come this same item, same maybe pure silver of 1 kilo, why is it different from one brand from the other? The premiums are different because we ourselves are being charged differently for those premiums. At the end of the day, whatever that you purchase, there's nothing wrong with it. So don't worry too much. Speaking about spread is just basically your buying price versus your selling price.
Right, so I think to make it simple as well, let's say if the spot price is $100 and 5% premium, it's $105 selling.
Yes.
And then let's say if the spread is 7%, then how much are you buying back?
That means you plus minus maybe about $98 is what we're buying back from you. So that is the spread between that $105 that you purchase and the $98 that you receive at the end of the day when we buy from you. Yeah, that's the spread.
Okay.
Take note as well, physical metals, they will always trade above spot. I guess there's this knowledge that there is such a thing as a zero premium.
Right, it's quite rare. I think it's quite rare for a bullion dealer to sell zero premium.
Correct, yeah.
There are actually some cases in the past where there are scams about buying gold, then they're promising you a crazy interest rate, maybe like 10-20%. There's no free lunch essentially. So these are normally scams. We always say buy physical gold, keep it allocated to yourself, and then that's it. Anything else is, I would say, very dubious. So you have to really watch out.
Okay, next question comes from Y_silver, who asks, why is silver so much more volatile than gold?
The username is real or not?
I'm not sure, I did not check, but yes.
Why
Interesting
silver
choice.
Why silver?
Why silver? Must be a big fan of silver.
Right. We all know if you're into precious metals, silver and gold has always been compared, side by side, right?
They're
Like
siblings.
gold and silver, both are monetary metals. Gold is always often looked as the main investment hedge, right? People buy gold. But silver, there's monetary metal and it's also an industrial metal. So basically, there are industrial players that drive the demand up and down for silver. The price swings because silver is used for EV, solar panels, so on and so forth. Recently, there's the AI boom. So they want to build more data center where they need silver, they need more solar panels for green energy, so on and so forth. While gold is mainly, people use it as an investment hedge most of the time. And there's another way to look at gold and silver, which is the gold-silver ratio. So essentially when gold-silver ratio hits like 100 to 1, happens a few times, that's where people see as an entry point to buy silver because we believe that the ratio, gold-silver ratio shouldn't be that high. Right, so right now, I believe it used to be sitting around 60 or 70. So that's one way to look at the price of silver.
Hope that answers that question. Final question, I assume, for this one. We have somebody from username Thinking Ahead. I like that username. Will gold ever become zero?
That's a great question.
Yeah.
What do you think? I think realistically speaking, gold price wouldn't go to zero. Gold has been around since our ancestors, depending on which.
Donkey years.
Donkey years, yeah. Like 5,000 years ago, Egyptian times, Qing dynasty, whatever it is, gold has always been around. And I believe that gold will continue to be around for, the next 5,000 years.
The next donkey years.
Yeah. That's my take. What about you? What do you think?
Yes, I think gold will always stand on its own value over time till the end of time, I feel personally.
I think it's good to understand that
Yeah.
money, the US dollars, whatever dollars that we're talking about is just currency, it's a piece of paper.
Yeah.
And then that's why people say, gold is compared to M2 supply because end of the day, when there's a crisis, people tend to sell their currency, their fiat into gold just to preserve their wealth essentially.
Physical gold is the way to go.
Yeah.
It will never go worthless.
Thank you for joining us today. We hope you have learned something from us. And if you have any more questions, feel free to leave it in the comment below. So we'll see you next time.
Bye.